Hi everyone, welcome to this week's episode of the Crypto Wealth Cafe, brought to you by Dacxi, powering serious crypto wealth for serious crypto wealth investors. It is time for our weekly look at the markets, and well, it's been a very eventful fortnight or so in all global markets, but particularly, of course, as I'm sure you're aware, in the crypto markets, never a dull moment. So, all right, let's look at the markets. Just before we do, don't forget, put on the kettle. Time to make yourself a stimulating cup of coffee, a relaxing cup of tea, or if you've been looking at the charts too long, perhaps a fortifying stiff drink, only if it's after dark, mind. All right, here we go. All right, so over here at CoinMarketCap, we can see Bitcoin 30,367 US, Ethereum 2,080 US, and not too much has happened since the big crash. I mean, Bitcoin is kind of roughly holding steady from where we were a week ago. Bitcoin's still down from where we were a week ago. We can see over on the Fear and Greed Index, it is now down to 8, extreme fear, and I was just checking earlier, and that is the lowest it has been since early 2020. So the sentiment in the markets remains dire, I think it's fair to say. And if we just quickly check in with the Bitcoin chart, so this is the crash. It started up here at around 40k and just plummeted down. Got as low as really around 26, 27k. And now just kind of stabilizing in this range here, which is really just around 30k US. Now, of course, it is not just in crypto. All financial markets around the globe are suffering at the moment. And this is the same old story. I feel like I say this every week, but it's, just a combination of a multitude of factors, a perfect storm, if you like. We've got the lingering effects of the COVID pandemic, which... the pandemic is just not going away. All the kind of easy liquidity, the money printing that happened in the first 2 years of the pandemic has caused inflation just to begin to really ramp up all around the world, which is just putting additional pressure on all global economies. So the Fed, of course, are now stuck between a rock and a hard place. Do they fight inflation? How do they do it? What do they do with interest rates? It's all a bit of a balancing act, and the result is what you see here. Extreme pain is concentrated in high multiple tech stocks, but there is damage all over the place. So I thought this is fascinating just to see kind of how much some of these big stocks are down from their all-time high. So you can see Google doing well, only 23% down from all-time high. Microsoft doing well. Nike 36% down from an all-time high. Tesla doing well, only 37% down. Amazon only 40% down. But at the other end of the scale, who do we know down here? Virgin Galactic, an incredible minus 89% from their all-time high. Beyond Meat, an interesting one. Yeah, they're around 84% down. Zoom, of course, Zoom was one of the early success stories in the pandemic as we all went online. I mean, I'm using Zoom to record now, so we all know the Zoom story. We've all spent way too much time on Zoom during the last 2 years. So while they did well at the beginning, they're now down 83% from their all-time high. So somewhere in the middle, you've got big names like PayPal, Netflix, Lyft, DoorDash, Uber, Facebook, Disney, eBay, Starbucks. Biggest names in the world, biggest brands in the world. A lot of people have done very well riding these stocks up, but of course, they're suffering now, just as crypto investors are. Now, of course, What is the reason for the kind of the crypto crash? It's funny how you always see mainstream news. They love to report on a crypto crash. They're a little bit more quiet when crypto and Bitcoin is going up. But man, they do love a crypto crash, don't they? And well, fair enough, we have had one. And one of the catalysts for this, of course, was really the implosion of Lunar and Lunar's UST stablecoin. So because it is really all that anyone has been talking about over the last week or so, and it is the catalyst for the extreme dumps in crypto, if you like, I thought it'd be worthwhile just recapping it as briefly as I can. So, of course, in crypto, we have stable coins, right? And stable coins are supposed to be one thing. What is that? Stable. So a stable coin should equal $1. That's the whole idea. The purpose of stable coins is, they exist so that people can get in and out of the dollar easily when they're making trades without having to go back to a legacy financial bank account, which would take too long. So that was the kind of the original purpose of stablecoins. And so now, because of their ease of use, they facilitate most crypto trading volume and most action in the various DeFi ecosystems. Now, there's a few different flavors of stablecoins out there. Tether, of course, is the big one. There's USD coin. There's Binance USD coin. There's DAI. And of course, Terra USD or UST, which is the one that collapsed. So those are the large stable coins in there. They represent around $160 billion of value. Now, the three big ones, USDT, USDC, and Binance USD, they're collateralized stablecoins issued by a centralized identity. And so that entity owns a treasury of dollars, which is crucial, to back each coin, so that each coin can be redeemed for $1 by the holder from the issuer. And that's what gives those stablecoins their value, or the confidence, if you like. So traders know that they can always redeem those stablecoins for real fiat dollars. DAI is a bit different. It's collateralized and backed by a diversified portfolio of crypto assets. It's a DeFi coin. So MakerDAO manages DAI, so it's collateralized with crypto rather than dollars, but it is over collateralized. So they've made sure that there's a lot of collateral there in case something should go wrong. Now we get to UST. The lunar stablecoin, which is different. It's not collateralized. It is instead what is called an algorithmic stablecoin, and it was powered by the Terra protocol and backed by a crypto token called Lunar. So the idea is when UST's price is too high or more than $1, the protocol incentivizes users to burn Lunar and mint UST. Now, the flip side of that is when UST's price is too low or less than $1, the protocol incentivizes users to burn UST and mint Lunar. So this is all supposed to balance out and keep the peg stable. It's clever. It's a brilliant idea. And for a while it worked. But the problem is, it's a beautiful idea on paper, and it worked until it didn't. And, algorithmic stablecoins are a really fascinating idea in crypto. A lot of people are excited by them, but they're also viewed as very risky, very experimental, and it's a little bit too soon to see how we can get an algorithmic stablecoin to work at scale. UST was by far the largest one, and well, we saw what happened. At scale, it got too big, it got attacked, and it lost its peg, and the market went right down into the toilet, excuse my language, listeners, as a result. So this is what happened last Monday. UST, one of the largest stablecoins in the world, it was worth $18 billion at its peak. It was attacked, really. Doesn't really matter who attacked it. It's just that's how markets work. If some participants in the market can see an opportunity to essentially attack another asset, then markets are war zones. That is fair game. It's a little bit similar to when George Soros essentially did the same thing. He shorted the British pound, saw a weakness in the Bank of England, made a lot of money shorting the British pound. It's a speculative attack on another currency. It's kind of what this is. Anyway, so this is what it looked like on the chart. So this is the Terra USD chart, which is the stablecoin. So you can see up here at $1, that's what it's supposed to do. It's supposed to be just up here worth $1 the whole time. And then boom, started to lose its peg, a little bit of recovery, boom, boom, boom. And eventually pretty much capitulation, and it's now worth almost next to nothing essentially. So Lunar, which is the crypto asset that kind of is supposed to back USD, one of the success stories of the recent crypto bull market. So both these assets were very popular in the bull market. You can see this is the Terra Lunar chart. This is where it was deployed, protocol started, and had a great run up. But then last Monday, bam, effectively back to zero. And look, make no bones about it. This is kind of the single biggest wealth destruction event that crypto has ever seen, because it's worth, a lot, 18 billion, whatever it was worth. And so all those Lunar holders, effectively, they didn't really even have time to sell. A lot of them, they just saw their investment go from hero to zero within the space of a 24-hour period, and all that wealth destruction wiped out. A lot of holders were retail investors. Very, very sad to see. And of course, what's interesting about Lunar and UST, it was led by a brash, charismatic leader, and these people are great salesmen in the bull market. So it's easy for these things to, become really popular in the bull market. Of course, when the market turns, you find out who's not wearing pants, as it were. So this is Do Kwon, the charismatic leader. He's the leader of the project. The reason I say he's charismatic is probably the wrong word, but he was very brash, arrogant. Even this is an example of one of his arrogant tweets. So he says, "Hey, I'm up. It's an amusing morning. Anon, you could listen to crypto Twitter influencers about UST depegging for the 69th time, or you could remember they're all now poor and go for a run instead. What would you do?" So you can see this was tweeted on May 8th, when before any of this market crash, dump, all that stuff happened. But the point, what he's saying here is everyone was discussing the potential for it to happen. But Do Kwon arrogantly said, no, it's not going to happen. And he laughed at people. So, what's that old saying? Pride comes before a fall. Yeah, classic example of that. So as I say, all along, skeptics had been wondering, what if there's a bank run on UST? Will it go into a death spiral? And many believed this was inevitable. So here's just a couple of tweets that show this. Is Corey Clipston. He's, I think, the founder or the CEO at Swan Bitcoin. This is back in April that he tweeted, "Terra will remain fragile in the long run no matter what. The longer it takes for Terra," and that's Lunar, "to go bust, the bigger it will be when it happens, and the bigger the repercussions will be. For Bitcoin's sake, let's hope crypto traders and funds kill Lunar UST in its crater." I mean, that's what happened eventually. And he says, "Decentralized stablecoin is an oxymoron. Do Kwon and the Lunar Terra USD promoters are lying to you. It's just another, can't swear, just another Ponzi with some orange washing Bitcoin affinity scamming sprinkled on top." So kind of harsh words there, but proven right. All right. Why does all this matter? I mean, kind of let's pull out three threads here. Obviously stablecoins are meant to stay at $1. Minor fluctuations are normal, but once you start going down to 90 cents, 80 cents, 70 cents, or back to zero, obviously that is catastrophic. That is not a stablecoin. That is an unmitigated disaster. Now, Lunar's collapse affects everybody. It affects millions of retail investors. There's been some horror stories of just everyday folks who bought into the Lunar story. They believed in the Lunar story. They put their savings into the Anchor protocol to get the 20% APY that Lunar were offering. And they saw it all collapse. It's very, very sad. And of course, the market, there were billions in collateral that Lunar were holding, and a lot of this was in Bitcoin. They had to sell all that Bitcoin to try and defend the peg, and it didn't even work. So somewhere in the order of 80,000 Bitcoin, we'll come back to that, was sold last week. And that is why the crypto market crashed, because these guys, Lunar, they were forced to unload this massive Bitcoin reserve that they'd built up using Lunar funds. The Bitcoin collateral was supposed to defend the system. It was supposed to be too big to break, but no, it was not. So third threat, of course, is that crypto's credibility unfortunately took a big hit because one of the market's largest stablecoins proved to be not stable. There was a bank run on it and it collapsed. This, of course, gives regulators the motive and rationale to aggressively regulate stablecoins because they view them as a threat to the US dollar. And Janet Yellen has already come out and talked about this, which we might have next. Janet. Let's listen to Janet here talking about this. Come in, Janet.
There was a report just this morning in the Wall Street Journal that a stable coin known as Terra USD experienced a run and had declined in value. And I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need a framework that's appropriate. I would note.
Yeah, so and Janet Yellen has been talking about this for some time. And don't get me wrong, I'm not against regulation. We do need regulation, but it's got to be that balance between a regulation that protects investors, but still encourages innovation. You can't throw the bath out with the bathwater, or is it reversed? I don't even know how that saying works. Anyway, I think you know what I mean. Also, so the Congressional Research Service, whoever they are, they just put this out about yesterday, 24 hours ago. It's just a report on what happened for the US Congress, talking about algorithmic stablecoins, what happened with the Terra crash. And so you can see it's just going to start ramping up. There's going to be a lot of pressure in the US especially to regulate stablecoins, to regulate DeFi, regulate crypto, Bitcoin. Again, the key point is, yes, regulations are good. They're positive for the industry. But there's also look at what Elizabeth Warren says. There's a vocal, powerful segment of the US political system that are anti-crypto. So it can easily swing too far enough that it would be very, very bad for the industry. So and events like this give much more momentum to those who are just anti-crypto at whatever costs. So that's the potential problem here. What is this? So this is I just had this bookmarked here as an example of, this is back from May 1. This guy, Halam and Chapitas, he wrote an essay exactly on what he thought the weaknesses were in Terra and why it would go wrong. Bang. He was right. Same with Lynn Olden, who's one of the more respected Bitcoin and financial market analysts on Twitter. She kind of said the same thing back when Lunar were buying a lot of Bitcoin, and I think I said it myself here on the Crypto Wealth Cafe. A lot of Bitcoiners were happy that Lunar were buying 80,000 Bitcoin. They were one of the bigger buyers earlier this year to build up this reserve. And, Lynn said, look, this presents a future risk for the Bitcoin price. If Terra encounters a problem and is forced to sell a lot of Bitcoin to defend its USD peg, it will be detrimental to the Bitcoin price in a similar way that their current buying is favorable to the price. Terra's unsustainable anchor protocol with 20% yields results in a lot of UST demand. And with this new reserve practice by Terra, UST demand now results in Bitcoin demand. So that was, Lynn saying that was a source of indirect, artificial, and unsustainable BTC demand, when everything is going well. But when everything is going bad, she says that if everything goes bad, we could see tens of thousands of coins worth of rapid Bitcoin selling pressure. She says, I'm not saying that will happen, but it's a factor to monitor going forward. But that is exactly what happened. So, it's not like some really well-respected and smart, sensible people, kind of people I listen to and follow, listeners, warned that this would happen. And so, yeah, it is nonetheless very sad to see. This is another example, just someone else who was making the case that, Lunar was an explosion waiting to happen. Now, so while we had all these skeptics, of course, we also had equally respected crypto figureheads who were very bullish on Lunar, including a lot of big VC firms, including Mike Novogratz, who is the CEO of Galaxy Digital, one of the big crypto funds in the space. He was a massive lunar bull, so much so this is a tattoo that Mike got back in January at the start of the year. That's how much he was believing in Lunar. And again, it's just funny. It's kind of the one of the signs that you might be approaching the top of the market is when people start getting crypto tattoos. It's just, I don't make the rules. It's just one of those things. So if you ever see someone getting a tattoo, man, that could be a sign that they are in too deep, or again, pride comes before the fall. Duquan himself, the founder of Lunar, he named his daughter Lunar, and so again, it's just, you got to think before you do these things. Don't get in too deep. All right, so where are we now? This is the Lunar Foundation Guard. It's just kind of trying to take stock. So before the crash, May 7, 2022, the Lunar Foundation held a reserve consisting of the following assets. So this is supposed to be their reserve to protect the UST from depegging. If anyone tried to attack it, they were supposed to have all of these assets to defend against. Of course, they've got some BNB, they've got some Avalanche, USD, Lunar, some stable coins. But, the big kicker here is 80,000 Bitcoin. And I think at the time, that made them basically the third biggest individual holder of Bitcoin behind, obviously, MicroStrategy, Michael Saylor were first, Tesla a second, and I believe the Lunar Foundation were third with 80,000 Bitcoin. Incredible. But again, they just couldn't hold on to it because as soon as they got attacked, they were forced to liquidate all that Bitcoin. We saw what happened in the charts. That took us from 40 to 30, and boom. So what do they have now? What have they got left? 313 Bitcoin, from 80,000 to 313 Bitcoin, a couple of $1 billion, poof, gone. So this is still coming out on the wash as to exactly where all this has gone, and they're documenting it, but it's still a little bit early to have a kind of a final wrap up on all of this. But, with events like this, says me old mate, checkmate, Bitcoiners are right. The imbalances introduced via fiat-style Ponzi-nomics and misaligned incentives create financial and systemic risks. Many folks will leave the space burned, and a few new Bitcoiners were forged. So I guess it's another way of saying, just beware in bull markets or when everything is going up. Not everything is as it seems. And of course, when the bear market comes, when the tide turns, the water runs out, and we see who is not wearing pants. And it's good. A market crash like this, a bear market, of course, it's inevitable. These cycles are as old as time, and during the bear market, it's a good opportunity to sort the wheat from the chaff. There's a lot of scammers out there. There's a lot of Ponzi coins. There's a lot of coins that have no business being there and don't have a lot of value. So now we see who the blue chips are, who the builders are, who the credible assets are, and we're due a washout, I suppose, and that is what is happening. So Lynn puts it this way: imagine you make an iPhone, and then iPhone is Bitcoin, and then 20,000 imitators make a buggy knockoff fake iPhone with a glued-on Apple symbol that doesn't work. That's Bitcoin versus crypto. It's time to test everything, break everything that can be broken. So the meaning here, of course, Bitcoin is battle-tested, Ethereum battle-tested, everything else not really battle-tested. Lunar got battle-tested last week, and it could not stand up to the battle. It imploded. And most assets, Bitcoin and Ethereum aside, I don't think they could stand up to this kind of pressure. So that's why you've got to be careful with what you invest in crypto. Don't invest in too much stuff you don't understand, or if you do, it's fine to have little speculative investments, throw some money at some small coins, but not your life savings, not huge amounts. And in my view, my portfolio is always very heavy Bitcoin and Ethereum, and anything else is just small amounts, just for fun, just for speculation. Expect it to go to zero. All right. Is this your first time, watchers? Was this your first significant market crash? Is this your first bear market? You got to understand from some people's perspective, this is how you earn crazy returns over the years, by tolerating volatility that no normal person can or would tolerate. So, there's no use buying a bunch of crypto at the top and then waiting for it to crash and selling it when it crashes, because then you just lost all your money, lost all your assets. So the question is, can you tolerate volatility over a year, 2 years, 5 years, 10 years? After 3 or 4 years a market cycle, you'll probably be in the green. You will have learnt some lessons, but it's just not easy. Tolerate volatility. It's intense. All right. This is from Josh Olszewicz, who is an old friend of mine. I used to work with him. He's a very good trader and charter. He just said here, hello guys, listen up. Here are the only 3 charts you need to make it through a bear market. It's just a bit of fun, but maybe we'll keep an eye on them as we go into the bear market and see where we are. And they'll give us perhaps a useful guide on when we might be coming out of the bear market. So this is the MVRV Z-score. I'm not going to explain how that is calculated. All you really need to know is, follow the Z-score. When the Z-score is up at the top, the market is peaking. That is a sign that is the top of the market, not a time to buy. It is a time to sell or hold. Do not buy there. So you can see this is in the top. Where is it at the moment? Well, it's coming down to the bottom, the green zone. That's called the green zone, the buy zone. The buy zone is the bottom. So you can see once it hits the green zone, that is a good time to buy. This is a good time to accumulate. Just dollar cost average in at the bottom. We're almost there. And when it starts going up again, so we'll watch this chart in the weeks and months ahead. As it starts going up, that's good. You can buy here as well. Getting up, you have confidence that the market is in a bull market. It's going up. When it's up here, boom, early warning sign. All right, that's chart 1. What is chart 2? The Bitcoin rainbow price chart. Now, Josh is having a bit of fun. He's not really serious here, but he kind of is as well. It's another way of looking at Bitcoin in terms of me old mate Dave the Wave's logarithmic growth channel. Kind of saying the same thing, right? But put into colors. Colors are always fun. They're easy to understand. So again, it's saying the same thing, right? If the rainbow is red at the top, that is maximum bubble territory. That is going to be the top. FOMO, do not buy there. Even in the orange, sell, FOMO. All right, so that is at the top, right? Yellow and green is in the middle. Is when you should be holding or accumulating. This kind of, what color is that? Aqua is buy. And look, that is where we are right now. And blue that is the bottom, that is the pure buy zone, basically a fire sale. So, I mean, past performance, no guarantee of future returns, of course. But, you know, if Bitcoin and crypto's kind of long-term growth potential continues as adoption happens, then of course the chart is just going to be up and to the right over time. And it just means right now you're getting value for your buys. As simple as that. All right, and this last chart, I mean, it's saying the same thing, just using moving averages. So down here at the bottom, buy zone. We're pretty much in that buy zone right now. All right, Ryan from Masari says, you know, don't look at this and be rushing out to buy necessarily now on the basis of what I've said. Do your own research. Talk to a financial advisor if you wish. But Ryan says, don't worry, you likely have months to buy around these prices, even assuming that they hold. We're at the 30k level for Bitcoin, 2k level for Ethereum. They're probably going to range around here. They could go down, you know, quite a bit. Could go down another 20%. On bad news events, and they could go up 20% on good news events, but probably ranging here for a little while. So yeah, just something to keep in mind. All right, do we have any good news? Well, I don't know if this is good news as such, but I just thought it was interesting as we finish off. You know, there are 44 nation states learning about Bitcoin in El Salvador at the moment, of course. Where else? So the heads of central banks of 44 nation states, 44 different countries, their head bankers have gone over to El Salvador for a kind of a big Bitcoin powwow. Now, I mean, spoiler alert, it's not the sort of the heads of the big nation states. It's quite a funny list actually. So, and of course you'd expect it to be, but it's a bit of a rogues gallery. So. Paraguay, Angola, Ghana, Namibia, Uganda, Haiti, Jordan, Gambia, Madagascar, Monetary Authority, Rwanda, Pakistan, Egypt, Jordan, Nigeria, Armenia, Bangladesh, Zambia, Liberia, Sudan. So, you know, a lot of the smaller countries, probably poorer countries, less Western countries, but that is how it starts, right? That is how it starts. So imagine if just 2 or 3 of these countries, head of their banks, they get orange pilled, they adopt the Bitcoin standard. That is how it starts. So I think we've reached the end of the show. I hope you learned something about Lunar and why algorithmic stablecoins are a fascinating, exotic experiment. And crypto is full of fascinating, exotic experiments. But the more exotic and exciting and volatile the experiment is, you know, the less of your capital you want to risk in it. If you take one thing away from today's show, take that away. And look, hey, I'm excited. It's an interesting time in the world. It's always an interesting time in crypto. Are we in a bear market? I mean, yeah, I guess we are for now. We have been for quite some time. That is a time to build. That is a time to build your conviction. That is a time for the weaker projects to be flushed out. And don't worry, we'll be back here every week on the Dacxi YouTube channel here at the Crypto Wealth Cafe to keep you informed and track the market's progress. And we'll be the first to tell you when the bull market resumes. All right. Thanks for watching, everyone. This was the Crypto Wealth Cafe. Bye for now.